Good afternoon, good afternoon, good afternoon. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Monday, December the 16th, 2024. Okay, this here is my real trading account here with Tasty Trade because they don't have a paper trading account. I wish they did, but they don't because I would like to practice on my paper trading and Tasty Trade without using Thinkorswim, but because they don't have a paper trading account and Thinkorswim does, I use Thinkorswim for the paper trading. But for the real account, I have to use Tasty Trade. I mean, I could use Thinkorswim for the real account too, but I'm not going to do that. Excuse me, I'm going to use Tasty Trade for my real account. This here is a traditional, excuse me. This here is a traditional IRA account. And what I am looking to do is place a trade in this account. This is going to be the first trade that I place in this traditional IRA account. I just set this up last a couple of weeks ago because I knew that I will be transferring the money over from my 401k, my traditional 401k from my previous job. I will be transferring it over to this this traditional IRA. So you can see the current balance. If I click on it, is about almost 10 grand. So um, it's about the same with the option buying power. If you notice here, let's see cash here. So the option buying power is about the same as well as the stock buying power. So in this particular account, I'm just going to look to say look to buy shares, but I'm not going to buy the shares. I'm going to sell puts because I don't believe in just buying the shares outright. So let's take a stock like, let's say, Riot. So I got about 10 grand. I want to potentially own Riot, but right now it's almost at $14. I don't want to pay $13 for it. So what I'm going to do, I'm going to just let me just move this over here. Is I'm going to click on the trade tab over here in Thinkorswim. I mean in Tasty Trade, and I'm going to do a 4-day trade. So this is going to this contract. Hold on, let me click on this again. Here, these are called expirations. So when you're dealing with options, options deal with contracts. Unlike stocks, stocks deals with shares. So you can buy one share, 100 shares, 1,000 shares, however many shares you could afford. Options don't deal with shares, they deal with contracts. So you can buy one contract, two contract, three contracts, so on and so forth. Each contract equals 100 shares of stock. So you have to know that. So if you deal with options, you're controlling. You don't own the shares, but you control 100 shares of stock. So I am looking to buy 100 shares of, let's just say, Riot, but I don't want to pay almost $14 for it because right now the stock is at $13.90. So I want a contract that goes out to 4 days. Now I don't mind buying the stock at 13.50. So what I'm going to do is click on the bid here. Okay. This tells you how much I'm going to receive. I'm going to receive $42. This will come into my account right away. I have a 66% chance of making at least 1 cent on it or making a dollar on this trade. 66% chance. Okay. I have a 66% chance of, or 65, or let's keep moving around, of at least keeping half of this amount, this $43 amount. Okay, but I'm going to be tying up $1,308 in buying power. Let's review and send. Perfect. Let me move this over here. Sorry, just keep moving this thing around. And so I will collect $41 so after commission. But what I want to do is see if I can do a little better. I'm going to still sell that put, but what I'm going to do is sell a $15 call Now, will it let me do that? I will collect $75, and yet I will still keep the same buying power. But I dropped my probabilities now down to 57%, but that's okay. Selling uncovered calls is not enabled for this account because this is a traditional IRA, and you need at least, I'm going to need at least 25,000. So what I'm going to do is buy a spread far out of the money. I'll just buy it at 20. So this way, that takes out that naked call. So, and I'll still collect about 74 cents, $74. They're calling it a jade lizard. I like that, the name of that. So I collect about $74. So if I'm going to collect that much, then what I might as well do is get close to that. Instead of doing it at 1350, no, you know what? I'm going to leave it at 1350. I'm going to leave it at 1350. And here's why, because I'm going to collect about 74 cents in credit. Right now it's working. Let's click on activity. I want to get into this trade quick because I don't want the market to close on me. So I'm going to replace this. I'll collect a little less than 74 cents. I'll do more towards there. 71 cents. This should get me in. I'll collect 67 cents, $67.61 on credit. That got me in. That filled me. Okay. So I collected 71 cents or $71. So I collected a total of about $67 after commissions and fees. I get to keep that money. I get to do whatever I want, you know. But hey, that help pay on a bill or whatever I need. But I'm not going to withdraw money out of this traditional account because now you got to pay taxes and penalties on it, and that can get expensive. So I'm going to avoid doing that. So let me go to my spreadsheet, go to my traditional IRA. So you know what? Let me copy this over to my traditional IRA. So the trade is Riot or Riot. So this is an open. Current date is going to be 12/16/24. This expires on the 20th. 24. So this equals this minus this. So that should be control 1, a general number. So that should be good for 4 days, like it showed on the option chain. The current price of the stock is 1378. The short put is at 1350. So it's about 2% away. The short call is at $15. and that's almost 9% away. The initial credit received is 71 cents. And after fees and commission, the credit received is $67 after fees and commission. By buying power effect, let me see. Third, 1774, around 1774. So I can make almost a 4% return for this week if I get to keep the premiums. But I'm looking to buy the shares. So if I buy the shares, what I'm going to do is do a trade to where, oh, um, so what I'm going to say is potential cost basis. This is if I have to buy the shares, what it's going to cost me. So it's going to be, let's see, I collected how much? 71 cents. So my potential cost basis is equal to the price I would have to buy the stock at minus what I collected. 1279. Actually, I'm going to put this credit, initial credit. No, I'll leave it as a positive. That's fine. So that means as long as the stock stays above $12.79, I'm making a profit. Okay. I'm making a profit. I'm getting paid to buy shares of stock. That's basically what I'm doing in this traditional account. Getting paid to buy shares of stock. Okay. So that takes care of the traditional IRA. Now let me go over to not that one, this one. This is my Roth IRA, and I'm going to sell. Now, on this one here, in this account, I'm going to do what is called a credit spread. So I'm not going to do the same trade in all my accounts. That's redundant. So what I'm going to do is I'm going to do a credit spread in this particular account. So now I'm going to go to Tesla. Going 4 days out is normal. Right now, the stock is up about $23, almost $24. It's a $460 stock. Obviously, I cannot afford 100 shares of the stock, so I'm not looking to buy the stock. But I want to be able to make money off of the stock. As you can see, this is the expiration. December 20th is the expiration. These are the strike prices. This is the price that I'm agreeing to buy or sell at. This little orange or brown strip here, this is called what the market is expecting. I mean, what Tasty Trade is expecting, or the market is expecting excuse me, what the market is expecting Tesla to move about $27 in this range within 4 days. The implied volatilities, which is what I like, is above 50, so that's perfect. So what I'm going to do is sell a put spread here. So I'm going to do it at around a 20 delta, just slightly outside the expected move. And I'm going to do it $2.50 wide. For this expiration, I'm going to do 2 contracts because the buying power here is $202. I want to collect at least, yeah. So this is close to 100. So I get about 100 for this week. So what I'm going to do here is go to my Roth IRA. And I did some trades earlier in my Roth before I had to pull some money out, for some expenses. So what I'm going to do here, I'm going to do something a little different. So let's color this in, and we'll work on this side. So you're going to say symbol. This here is Tesla, TSLA. And since I'm doing credit spreads on this one, I'm going to do this one a little different than I've done in previous trades. So we're going to say current date, well, 16, 24. Then um, we're going to do expiration date, 12/20, 2024. Trade days, so that equals this. No, this minus this. Current price. 460.41. Then I'm going to say strike price. Put no. Let me see. Type of trade. BPS, which is a bull put spread. So that's the type of trade. Because I'm doing. Um, then I'm going to say sold, strike, 435, bought strike, 432.50, no, 432. Oh, okay. Actually, I did it wrong. 432.50 to 430. 432.50, 430. Distance equals this minus this. So that's $250. Number of contracts is 2. Premium collected I'm putting slash paid. I'm going to say collected. Premium amount after fees and commission. Let me see. Buying power effect is 4,600. Review and send. Let's see if it gets filled. I'm going to lower this. $75.48. So I got filled at 46 cents. So 46 cents times 3 2 times 100. So I collect about 90, a total of about $92, which is fine. So you'll see here on my spreadsheet, on my Roth IRA, I did a trade here, Tesla, number of days is 4. So this trade expires in 4 days. The current price is this, 460, 41. Um, so I sold the 432 strike, bought the 430 strike. So I'm risking $2.50 per contract. Doing 2 contracts, I collected $4, 46 cents per contract. So I'm making about $92, that comes into my account. And you'll say, well, um, here's your buying power. Your buying power is going to be your risk here. So I'm risking $406 to collect $92. So I'm going to say ROI. How much am I getting for this week? So that equals the return divided by the investment. So I'm making about a 23. If this goes right, I make a 23% return. So let's see. And if I have to adjust, then I can just simply put it down here. Type of adjustment, sold strike. Okay. Premium collected. Okay, so if I got to make the adjustment, I know what to do. So this is in my Roth IRA account. Now, what I want to do is now, so that trade went through. So I made, collected 46 cents. So then now what I'm going to do is go into my Thinkorswim real quick, and I'm going to do a trade here. Okay, let's do SPX. No, I'm going to do /ES, which is going to be a 1 day trade. And I want to do this before the market closes. So you know what? Yeah, let's do / No, you know what? Let's do SPX. I'm going to do a 7 day trade here. It's not really going to be 7 days. It's going to be Friday to the 20th. I'm not going to do AM. I'm going to do weekly. Because I want to do this before the market closes. So this is $72. Let's see if which one is greater. $60, $70. This is 59. So I'm going to use the greater of the two numbers. So if this is 72, 72 times 4 is 144. So 144 from this price, 60, 73 minus 144. You know what? I ain't got time for all this. So you know what? I'm going to just, I know what to do. I'm going to just go and do the put side. I do around a 10 delta. Because I'm going to be doing around a 10 delta anyway. So I've been doing it 59.50, 20 points wide for, oh no, this is a 7-day thing. So it's a 10 points wide. So that's 50 cents. And then on the call side, let's do the 61.65. 175. So $1.35. Let's see what happens. 132. Let's see if this goes through before that went through, which is perfect. Which is perfect. Okay. So $1.30. Okay, so what I'm going to do, I'm going to do a trade for tomorrow. I'm going to do the / no, I'll just do the SPX for tomorrow as well. So that's going to be a 1-day trade. So this is a 7 and a 1. And then I will go. This is 25, so we're going to say $26. So 60, okay. Let's do is 10, and we're going to do 20 points wide here. 30. And then we're going to do on the call side, 30 points wide on the call side. I'll do a 12, 6,100. Let's see if this goes through for tomorrow. We got 2 minutes, so I have to kind of rush. Let me edit this, see if I can. I got 1 minute left. Let's see. I usually have trouble with this 1-day SPX thing. I could use the / ES though. Now, usually you don't want to do it this week because you have news coming out. So that's why this would not usually be a good week to put it out, the SPX for the weekly. However, because this is a practice trade, I want to practice so in case like something happens in the market that I didn't expect because news is coming out this Wednesday. So the market, I don't know how the market's going to react to that news, but what I want to do is prepare myself via practicing. So if the market moves violently against me, so that trade didn't go through. Okay. I know how to respond. So I'll do the /ES because that market is still open. The E-minis is open 24 hours today. So I don't have to worry about. So this is $25. So times two is 50. So 61. So I'll go here, 60, 35. 35 is going to be 15. And we're going to do two contracts. And then on the call side, hmm, there's no premiums on the call side. Interesting. So I can't do nothing on the call side. So, all right. So I won't do anything here then. Because there's nothing on the call side. If you notice, there's no premiums. So this is kind of weird. I think there might be an issue with the platform because that should not be. Anyway, at least I got my real trades done in my real account. And so I'm happy about that. I got that off before today. All right. I will talk to you later. And oh, by the way, if you like this, subscribe, give me a thumbs up, leave a comment. If not, you can still leave a comment. Talk to you later. Good afternoon, good afternoon, good afternoon. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Wednesday, December the 18th, 2024. It's really good morning, but well, the afternoon is only 2 minutes away, or a couple of minutes away. Anyway, um, this is again my real account. And remember, I put on a put, I sold a put at 13.50. And I also sold a call at at the $15 strike. And I also bought an out of the money call at the $20 strike, collecting about 40 something cents if you go to my positions. I collected actually 71 cents. So my cost basis, is 13.50 minus 71, which is where the strike price minus 71 cents. So as long as I'm above 12 and some change, I'm going to make some money on this trade, and this trade expires in 2 days. And I'm hoping to end up having to buy the shares. However, I want to own, I want to get involved in some Bitcoin. And I'm not going to buy the Bitcoin because basically if it goes up, the Bitcoin makes money. If it goes down, you're losing money in the Bitcoin after buying it. So what I want to do, but I want to buy the ETF. So the ETF is basically like a basket of shares or a basket of, not a basket of shares, I'm sorry, a basket of stocks. So it's just like going to the store and getting a basket and put a bunch of stuff in it. That would be like an ETF. So in this case, I'm going to go to BITO, ProShares Bitcoin, ETF. And what I like about them is that they do pay a dividend. From my understanding, they pay a dividend. But what I want to do is I want to own the shares. It has an IV rank of, say, 63. Let's see what this week's. Ah, okay. So they have an IV rank of 63, so that's above 50%, which is what you like. The market says that within the next couple of days, it should move just a little bit over half of a 74 cents in either direction. So that's fine, up or down 74 cents. So what I want to do, um, let me do something. So I want to see what how BITO dividend. Let's see. How often do they pay a dividend? Wow, a dividend yield of 47.5%. Okay. It's paid every month. So they pay a dividend every month. So that's fine. So what I want to do then, knowing that, so now that I know that, I want to sell for this week. I'm going to sell that put. This is in my traditional IRA account again. I'm going to sell this call and I'm going to buy this call. So I'll collect $52 for today. Buying power over 3,600. Oof. Okay, I'll do that. Let me do something. Actually, let's see. Let's click on review and send. One or more contracts have no bid prices. So let's edit this. Let's clear this trade. Let me redo this. So I'm basically doing what they call a jade lizard. This is much better. Okay. 27.52. Okay. That's a much better. trade. 52% probability of profit. I have a 47% chance of keeping at least 50% of what I collect. I'm willing to risk 2,700 here because why? Max loss is 2,600. That's saying if Bitcoin went to zero. But I'm going to show you how I'm going to protect it if I do end up owning the shares, how I'm going to protect this. So I'm going to collect 48 cents or $48. Actually, let me do this. Let's submit. This is a jade lizard. Let's see if I get filled because I got the capital to do this trade. Let's see the activity. Hard to borrow means that if I wanted to borrow the shares, if I want to short sell it, it would be hard to define the shares to do so, or for them to give me the shares to do so. So I'm not looking to borrow the shares. I'm looking to own the shares. So I'm going to let this play out for a little bit in the meantime. Now I'm going to check my paper trading account and see how my trade for SPX is doing today for this week. So right now it's at 60.62, up about $11. This is the position I have. So let's see where we're located at. So if you look at the graph, we're pretty much in the middle. So there's no need for me to adjust this trade. Um, so I will not make any adjustments here, which is fine. Let me see what deltas I'm at. I should be still around that 10 delta. On the put side, let's see. See, yeah, I'm around 10 delta on the put side. It should be around the 10 delta on the call too, somewhere around there. I'm at the 5 delta on the call side. So I'm going to leave it. There's no reason to make the adjustment as of yet. So I'm going to go back to my real account. Okay. Mm, still working. BITO. Now you say, Jermaine, why are you selling so close to the to the current price? It's because again, I'm looking to own the shares. Usually I don't sell this close to the current price. But when you're looking to own the shares, you want to get paid to own the shares. And I do not believe that this ETF will go above 2750 by Friday. But if it does, I'll just switch it over to the put side, roll it over to the put. Oh, excuse me, roll it over to the put side so I can get the shares. So I'm not worrying about that. The stock going up. Um, I want the stock to kind of go down though because I want to own the shares because they pay a monthly dividend. So that means every month you're getting a dividend check. That's not bad, even though it's very volatile. Because when you're talking about a 47% or something like that, 47% dividend yield, that's kind of rich. But I'm gonna show you how you protect the downside. I'll show you how to protect the downside. So if the ETF goes down, you're still making money, or you can still. Okay, let's lower this a little bit because I was hoping that this would fill by now. So let's go more towards the NASH. Let's say 44. That went through. Okay, so we're good. So now I'm in the position. So this is good. Now, once you buy the shares, I'm going to sell a few months out. So this way I can get my dividend. Cause I want to get the dividend on this. So it filled at 44 cents. So if I go to my spreadsheet, I'm here in my spreadsheet, go to my traditional IRA. So I'm going to go and copy this, paste it. This is BITO. Oops. This is BI2. Open. The current date is the 18th. Days. The current price is 26.73. $26.50 is the short put. So it's less than 1% away, which is fine. My short call is at 27.50. That's at about almost 3% away, 2.88% away. 44 cents. Credit received is $40.61. Buying power effect is 27.56. Potential cost basis So as long as the stock or the ETF in this case, which is at 2673, as long as it stays above 2606, I'm making money on this trade. It's okay if it goes down below that. That'll be fine, but I'll make it back up. I have different ways of making it back up. Um, to make about a 1.5, almost a 1.5% return in 2 days, that's not bad off my buying power. So I'm doing it off the risk off the buying power and not the amount in the account. So okay, that's all for now, and I will talk to you later. Let me save this. Okay. Good morning. Good morning. Good morning. I want to welcome you to another segment of the Jermaine Brown Trading Show. Today is Thursday, December the 19th, 2024. Okay. Yesterday we had a very bearish day in the market because of the Fed news that came out. And I got some positions that are right now being tested. Right now I'm looking at my Tesla position, my credit spread, which is right now a delta of 43, which is in the red zone. And though I wasn't trying to do that in this particular account, but I need to make the adjustment because I got to protect my account. So what I'm going to do is buy these positions back, right? I'm going to try to keep it in the same expiration. So I'll move it down to here. So basically, what I'm doing is just getting it out of danger. So I'm going to pay about $43 in debit. So that's fine. But then what I'm going to do is I didn't have nothing on the call side. So what I'm going to do is do at least, oh, it's not going to let me do it that way because I got 4 positions already. Sorry. So I've just got to take the $40 debit, move this. So I'm going to pay about $81. So I'm going to lose about $81 that of the 90 something that I collected. So technically I'm still in a winning position. But first, let's do a replace this. I'll just pay 99. So I'm going to take a losing position here. So I'm paid back about $1. So what I'm going to now have to do to move it out of danger is now I'm going to sell and get back $1. Let's see. Let's do 2 contracts. That's 64. So what I'm going to have to do is move this up. 72, 84, 102. That should do it. And this is without having to expand my widths or anything like that and collect 50 cents. Let's see. No, I have to trade. Nope. So that won't work. So I gotta get a little closer. 110. Let's see. Which would put it at around 27 delta. Let's go to activity. Let's see where we're at. I'm gonna let this play out a little bit. See, but this is how you adjust trades where you're kind of in trouble. This is a good way to adjust some trades. And again, I didn't take on more risk per se because I still was only dealing with two contracts. Now I didn't have anything on the call side, but I just went ahead and added the legs on the call side. So I can't be tested on both the puts and the calls. I can only get in trouble on one or the other. So I'm just doing a little dance here to kind of get my let's replace this because I don't just need to so it's basically a scratch. So I basically got back the so then now let me look at the curve. So see, this is my position. So yeah. Um so now I gotta fix my spreadsheet. But notice how I got myself out of a little danger. Now again, I'm gonna let the stock do what it do. And then tomorrow I'll make even more adjustments if I need to. But this is how I could still end up being profitable. And I really should have gotten out of this trade sooner when I had a chance to take that 50% profit. I should have done that in this particular position, but I didn't. So now in my other account, here, Riot, okay, the stock is here. So what I'm going to do is move these calls up. So go here and move this up. Let's see if I can move these up. Mm, no, I could roll this out for another week, but you know what I'm going to do? I'm going to go and just take assignment. I'm going to take assignment and then I'm going to just sell some calls against it now. Um, let's see, Bitcoins. Let's see where we're at. Okay. Bitcoins, I could roll this out, move it up. 20 cents net credit, 17 cents. Let's see if it'll do that. I just kind of want to move it up. Now, why am I moving it up? So I could lower my cost basis further in this. So this way, because I do want to own Bitcoins, but get an even cheaper price. And while I'm waiting on that, here I got an SPX index that's deep in the money, 59.50, 59.40. Right now, the index is at 59.02. This went up $30. So this tells you this is deep in the money. So I need to fix this trade. So I'm going to click on this SPX, get rid of these calls. See here, my red is deep in the money. So what I'm going to do is roll selected. But what am I going to roll to? I could roll out to next week. Here's where my puts is located at. So what I'm going to do is roll out to the 5,900, and then it's 10 points wide. So I'm going to roll my short strike out to 5,900. Change this to 1 day. 1 day. And then change this here to 15.8. So I'm going to pay about $2.80. Okay, I got filled on that other order. I'll go back to that in a minute. So I'm going to pay about $280, $284. Let's see. So I'm going to roll this out, take a $284 loss. Now, again, this is where I practice trading. This is a paper trading account. So this is where you do all your practicing. This is why I know, how to roll it out. Okay, I'm gonna have to go higher, it looks like, because right now it's at around three something, so it's not gonna fill at 280. I'm gonna tell you that right now. Let's try 355. See, when it's deep in the money like that, it becomes complicated to fix this. Okay, so I got filled at 355. So what I have to now do to make up for that loss, I'm gonna have to on the call side adjust the call options, but and make up that 355. Let's see. I'm gonna keep the same expiration, but what I'm gonna probably have to do is add more contract. 59.45. Actually, I gotta give myself more room. 59.65. Yeah, I'll do 59.65. You know what? No, I'm gonna just leave this because this is gonna expire worthless. So there's no need for me to do that. Just do it this way, Dwayne. Because the calls are so safe, it doesn't even make sense to roll those out. Because why? It, they're worth nothing. See, look, they're worth nothing. 10, 15 cents. I mean, I technically can roll, but I'm not gonna roll. So what I'm gonna do is do something a little unique. And bring back in about that three something that I'm losing. 355. So how do I make a 355? Now I'm gonna have to take on more risk on the call side, but that's okay. No, this is going to get really. All right. Okay. Okay. Do 10-point wide. No, I'll do 20-point wide. And then do three contracts. This kind of makes it up. But I'm doing 20-point wide, but I'm increasing my risk on the call side, but this is how I end up becoming profitable. But that's okay because I still will have the capital in this case. But I'm trying to get my position out of danger and still make a profit. Perfect. So as you can see, move out of the way. So I had to buy it back for 365. Then I did another one for 125, but three contracts at 365. So I basically brought in about 10 cents, $10. $10. So hey, this is how I still end up, being profitable on this, but I have to, add on contracts, which is what I didn't really want to do. But when you're deep in the money like that, then you either have to extend duration or put on more contracts. And I chose not to extend duration, which means time, which means I didn't want to roll out to next week or something like that, which I could have, but I wanted to, see if I could still become profitable, even if, let's just say, Oh, excuse me. By staying in the same expiration. So this is how it looks. See, I mean, my risk is still to the downside, to the put side, because it's closer. This red line is closer to the put side. But look how I gave myself some room on the call side, which is what I wanted to do because that's where my biggest risks is at. So if the index keeps going down, which probably not, that's why it's up $43. So I'm hoping that it ends up around here tomorrow, and then so I'm good, and I end up staying profitable. Now go back to my tasty trade. So I got filled at $20 or 20 cents. So here I gotta go into my spreadsheet. And this was BI20. So adjustment. Current date is 12/19/24. Expiry date is still the same date. This is good. The current dollars of BTO is 25.78. Short put, I can take this part away because I don't need the put. Short call, I roll to the 26th. 26. That's not correct. H9. That's it. Initial credit is 2020. Whoops. And this is about what? 18 cents. I don't need this here. Potential cost basis. Now equals so basically, as long as the stock is above 25.86, I'm profitable. According to my spreadsheet, as long as the stock is above 25.86, I'm profitable by bringing in that extra 26. So I'm good here. But I'm going to go ahead and get assigned the shares. That's the goal. And then just simply collect the, I'm going to collect, I want to collect the dividend. I want to get practice collecting the dividend. And then, you know, selling. And I'm going to show you how I could protect myself on the downside so as to I won't take no real losses on this trade or this investment, should I say. I could protect myself on the downside. I'm going to show you all of that once I get a sign, which is what I'm looking to do, get a sign. Okay. I will talk to you later. Again, if you like what you're seeing, subscribe, comment, give me a thumbs up. You don't like what you're seeing, you could comment still. Let me know what you're thinking. I will talk to you later. Goodbye.